What if losing millions became your greatest advantage, guys? Today's guest, Lawrence Cow, he's a seasoned real estate investor and he knows this journey firsthand. So he scaled a co working empire across LA that lasted 7+ years. Then he proceeded to watch the pandemic completely erase that overnight. And then he rebuilt himself from scratch. Now, these are the types of people that you should aim to have conversations with because they've literally been in the trenches and their insight could save you big time. So I really enjoyed this conversation and I hope you do as well. All right. So, Lawrence, so imagine that there's a scenario. So you're on the headlines 5, 10 years down the road. What are those headlines going to say? Like, what do you want to be known for? Kind of what's your stake that you're looking to make or mark you're looking to make, legacy?
That's a good question. I would love to be known as an impactful entrepreneur. I think there's tons of people that are super smart and that we can all make money. But at the end of the day, I want to be known as a person who's impacting the community, the city at large, or the state, or the country. I just want to be known as an impactful entrepreneur. But more importantly, like I also want to be known as a good dad, as a good husband. I love to be known for that. In fact, that's probably more important than being a super successful entrepreneur, at least for me.
I would definitely agree with that. You've got the three
Yeah.
kiddos just like myself, so I could definitely
That's right.
respect
Yeah.
that. So no, that's good.
Yeah.
That's a good vision. And we'll get a little further into the investing side, but I know,
Yeah.
at least in my experience, I mean, well, the vast majority of people, obviously, they're kind of shaped by their background in some way, shape, or form. Obviously, you don't want that to define you, but it has a large factor on like why we make certain decisions. So with that, kind of what's your backstory leading into? I know I've met you in the Owners Club Mastermind with Pace Morby, but kind of leading into your real estate journey. What was it before that, and then kind of where you're at now?
I started real estate investment in 2008. I actually just graduated from design school, and I was working for a commercial real estate firm in Los Angeles as like a financial analyst. But when I started working for them, the market had crashed. And it was a friend of mine that started introducing me. He's like, "Hey, Lawrence, you should really consider coming to Bakersfield and do these trustee sales." And I was like, "Whoa, what is that?" He's like, you're buying properties at the courthouse steps because there's a lot of foreclosures and they need, people to pick these properties up. And I was like, all right, well, I've never done it. So he's like, well, I'll show you. And so that's basically how my whole real estate journey started. So I would drive from LA to Bakersfield, which is 2 hours away, and then go to these courthouse and start buying up trustee sales. That was a crazy time, right? Because the banks were just offloading these properties. There were tons and tons of properties. And initially, there's not a lot of people because the market just collapsed. Like hardly anybody's trying to pick. So I was like, oh man, this thing was $500,000 and now you're selling it for 100 grand or 80. It was just wild. So I was like, sure, I'll buy it. I figure I can, spend some money to fix it up, but then I can still sell it under market price. Because I was looking at it, I was like, I cannot even rebuild this property at the cost I'm buying it, right? The replacement cost is significantly higher than a 90,000, right? This thing, even if you rebuild it, it would still cost you 250,000.
Yeah.
Right. So I was like, I think this is a win.
So like when we had the supply chain issues and like the COVID era where it's like, no, it makes absolutely no sense to actually build something at that point in time. But yeah.
That was the kind of the beginning of my journey, and then build that business all the way up to about 2013. And then that's when I kind of dabbled into the co-working industry, the flexible space. That was that was the rise of WeWork. For those of you that don't know, I mean, at one point they were raising money at like a $40 billion valuation. Now, some argue, it was overvalued, but they were looking to go public, which they did end up going public, but that was not a easy process for them. The whole industry kind of collapsed during COVID, just with all the shutdown. And even prior to that, I think the industry itself is kind of shaky, where it started going downhill a little bit. And a lot of it is driven by the way the leases are structured. Like, for example, I master lease these locations, right? I'll do a 10-year lease. and oftentimes these leases are like $10 million or $20 million. So it's a big commitment for me. But I am, making an arbitrage between what I lease from the landlord, right, and then what I charge with my members. There's other companies that have done a better job, I think, to insulate them from down market is to structure something that's more management style. Like Regus will do that, or a company called Industrious were doing that. So they partner with the landlord, right?
Yeah.
So if the market goes down, they make a little bit less, but they're much more insulated from the downturn. And now during the upturn, the landlord get to make more money, right? So everyone get to enjoy the up and down, the ebb and flow.
That's good.
But in my case, like it's not like that. I make more when the market's great, but I also suffer a lot more when the market's down. So during COVID, on 2020, I had to close down my business. Our spaces were shut down in LA, and fortunately, I lost that business, and then I had to move up to Sacramento. That's where I live now, partly because my in-laws live in Sacramento, and I had to liquidate all my assets and basically just like kind of homeless. I was like, we're not sure where we're going to be. Picked up everything, moved to Sacramento. Originally, we thought, hey, maybe we'll just be here for a couple months. Ended up being over 5 years. Quite a ride. I remember 20-something years ago, I said, I visited Sacramento because my older brother graduated from UC Davis, and I went to the graduation. I was like, oh man, I would never live in Sacramento. And then here I am.
So going back to that's quite a history, and I know there's a lot more into it. That's a quick snapshot, but I can imagine. So you mentioned you got started in kind of that co-working space, more of the commercial aspect in 2013, and you said you had to exit it in 2020. That's a pretty substantial run. I mean, that's 7 years of your life, like going pretty hard in the business. What tell me about what was the highest point for you in that business?
I think scaling the business, right, to multiple locations. I mean, it's one thing to have one location that's doing well, that's making money, and then you start to graduate from that, where you start scaling and you're like, hey, I have multiple locations and they're all doing well. And actually, some of them didn't do well. And so trying to figure that out, right? I think the exciting part also just seeing a dilapidated office floor, or because usually we'll take, 20, 30,000 square feet or even bigger. But we'll take an entire floor of a building, and you see something that's just an empty shell, and you turn it into something that's beautiful, that is, a place where people come through and they work, and they, when they see you, they're like, oh man, this is such a great space. Like, that's really fulfilling. Like, I love that. So for me, that was the high, or one of the highs. I did a lot of syndication, like raise money with friends and family, and also outside investors. So whenever you're able to raise the money, you share the vision. People love the vision and they invest with you. Like, there's that high. You're like, okay, this is real. The affirmation of like, this is gonna work. So that's definitely, those are the highs for me.
So I'm definitely curious to hear what the lows are.
I would say really the lows, and a lot of it, I don't even look at them as lows anymore. I think I look at them as learning experiences. I would say toward the end, there were a lot of lawsuits that were coming after me, right? And rightfully so. Like, we just couldn't. We had about $3 million in back rent. Our members weren't paying us, and so we weren't paying the landlord, and we can't operate. So I also have several event spaces that I couldn't. It just sits there vacant, and I can't do anything, right? And so the landlord's like, you got to pay the rent. I'm like, I'm not generating anything from this asset.
Nothing
like, I can't. Yeah, that's right. Yeah. So those are hard, where you feel like you made a commitment to someone and then you can't fulfill it. Those are probably the biggest low for me. So the lawsuits coming from vendors that have worked with me for the last 6-7 years, and it was like, hey, Joe, like, I'm sorry, I can't pay the internet anymore. And then they're like, I get it, but we have to file a lawsuit against you. I was like, I get it. do what you got to do. Right. And so those are my lows. Like, I call them the soul crushing conversation with these vendors to also investors. Like that's probably the hardest. Just telling people, hey, I've lost your money. I don't have it. I look at other people's money more important than my own money. And so it hits me really hard when I have to call people and tell them, like, I don't have it, or I'm closing down, and I'm sorry you haven't made your investment back. So
That's definitely
that's probably, yeah,
I can most definitely appreciate that because I think I see it as the same way. It's more of like if I lose my own money, I understand what
yeah,
risks I had going into it. But
yeah,
if I lose someone else's, that's a huge hit to the gut. So
yeah.
imagine one thing with your obviously, I mean, you did have that really good run, and I think COVID. I mean, that happened to so many people, but yours was at a very large scale. I think in comparison to
Yeah.
definitely others that I know.
Yeah.
How about partnerships? So that partnership was a good run from 2013 to 2020. And I'm sure there was some up and downs before then, but partnerships are always determined by kind of the turbulence, like how they weather the turbulence or the waves or the storms. Tell me how that went down.
So I had a partner at Ignited Spaces, actually multiple partners, but I'm at a co-founder. I know him for a long time from school, but I think we jumped in to partnership without really understanding like exactly our roles. We're fairly young, I would say, and so our roles weren't like perfectly defined from the beginning. And so there's, I think, toward the middle or toward the end, there's just a lack of expectation of what I should do or what he should do or who's taking on what. And so if I were to do something again, I would set that expectation correctly from the start. That is, I would say, a mistake I made. And then also, their partnership that we got involved in, because I will look at them as like shiny objects, because what the partnership could potentially bring to the table, but ultimately they ended up being distraction to what we should have just, we should just focus on our core and not deviate away from the core. But because we were excited about what this could bring, and we wasted not only money but time, right? And so timing is everything, and we felt like we lost out on better deals had we just honed in, actually focus more on our sales, focus on our operation. But we're thinking like, hey, let's scale. It's the kind of the tech business during that run. It's like, okay, just scale as quickly as you can, because once you get to a certain scale, there's going to be, I don't want to call them dumb money, but like the VCs, they're just going to pour money in, right? And then you exit. That was the wrong way to do it in hindsight. I would totally do it differently. I don't know if it's slow and steady, but definitely focus on the operation more and sales, and really hone that in. And in fact, it's better to do one thing really well than trying to do multiple things not very well.
I feel like a lot of people, they get into partnerships that same way. It's like you've got that initial excitement. You're like, yeah, let's go, let's do this. And I think it's more often than not that people, they don't necessarily define, hey, this is what your role is.
Yeah.
It's like, hey, no, we're going to make a ton of money together. Let's just make this thing happen.
Yeah.
I would imagine that added a substantial, like much more of a stressor on you during the whole COVID issues that arise, because was there conflicts there to where you weren't necessarily on the same table?
Toward the end, we did resolve, but ultimately he exited the company in 2019.
Oh, perfect.
So
timing.
there was that. So perfect timing. Yeah. So he actually dodged most of the headache. Yeah, I took on all that. I would tell people it's pretty hardest to start a company, but it's 10 times harder to close down a company.
Yeah.
In my opinion, in the fashion that I did. I mean, there's just so much, because when you're involving lawsuits and also to make sure you're compliant, and then dealing with franchise tax board and IRS, and I mean, so it's all that. It was gosh, it took like a year and a half to actually properly
Exit.
right close down. Yeah, exit. So
That's the thing people don't realize is when you close the doors, it's not just I'm not in business anymore. It's like, no, you've got to actually wind down and shut down your entity and
That's right.
make sure you get all
Yep.
your tax bills all paid up and squared away.
Yeah.
Your final tax return.
That's right. Final tax return. People don't know. It's like, wait, what do you mean?
Yeah.
I was like, there's still a final tax return. It doesn't matter
Yeah.
if you file BK'd or closed down. Yeah.
So with that, so how did you manage? Because I know from my perspective
Yeah.
that
Yeah.
being a parent is like one of the most rewarding things, but it does add a significant
Yeah.
amount of stress when you're a business owner.
Yeah. And I think my daughter, she was 4 at the time, and then my son was 2. It was a hard time, not going to lie. It was probably one of the lowest point of my life where I felt like I hit my own version of rock bottom. But not just from a business standpoint, Josh. I would say personal level. I'll be a little vulnerable here. I think, like my marriage and everything. My wife married me 2013. So it was like all she ever known me or knew of me was like this guy launching business and doing all these things. And I didn't know all the emotion that was kept in her that really like unleashed when the whole thing crumbled down, right? And so it was not only a new beginning for me, but also a new beginning for our lives as a family. And so I had to rebuild trust with my wife, rebuild trust with my kiddos as a dad. I mean, it's just a clean slate. That's the best way to literally everything crashed. So we're in ground zero and we have a clean slate and we're rebuilding it. A lot of my time from 2020 to 2022 was just to have this inner healing and get my mindset right and just to be with my family. It wasn't about like, okay, this is now what do I do as an entrepreneur? How do I make all the money back? There's always in the back of my head, I was like, how do I get back there again? First and foremost, it was just like, hey, let's just get you healthy again, Lawrence. And then get your family healthy.
That's a huge skill.
Yeah.
Like that's a pretty
Yeah.
significant skill because I think a lot of
Yeah.
us, especially in the entrepreneur space, like going back to what you said, it's like, oh, how do I make it all back? It goes directly to that. I haven't run into too many to where they have that mindset. I mean, obviously in larger rooms now where I think that's maybe a little more common, but before I don't think it's as common outside of this inner circle where people would take the break and realize that, hey, this is what's important. So that's a huge amount of respect for that. That's awesome. Definitely a major testament to you and your wife, and the fact that your marriage is still standing after that's pretty substantial.
Yeah, I would say our marriage is way better now. Yeah, I would say the first 7 years was probably rough. If you ask my wife, she would say, man, the 7 years was not that great. From the outside, you would look at us as a great couple and everything is probably great. But deep down, the connection was probably not as strong as what we have now. I think the fact that we've gone through struggles and then be able to be just really vulnerable with each other and shared and okay, well, what's under this rug? Okay, let's just talk about it and let's work through it. And then I would add another thing that's really important is involving community around us. I lived in LA. So in LA, it's all about putting up this front, this facade, and that everything is perfect. And you don't want to ask for help because if you ask for help, that means you're weak or you have a deficiency in something, right? I think through my experience, I realized, hey, I'm asking for help not because I'm weak. I'm asking for help because I want to remain strong. I'm more likely to ask help from other people, right? Historically, I was not great at that. But also involving other communities to kind of speak into our marriage and speak into our life and walk with us. And then, and just we call it life on life, right? They get to see the good, the bad, the ugly, right? And then they get to give us feedback and we allow people to share things, right? So we invite people to say, hey, I actually give you permission to speak into my life or speak into my marriage. If you ever notice anything that's off, please let us know, right? And so those are things that we didn't do before. I mean, it's a transformation, a massive transformation for us. Now we're still in it. I wouldn't say you never arrive, with marriage or anything, right? You're just constantly growing. And so, but that's one of those things that I've learned. It was just so valuable for me, where I am more willing to ask for help and engage other people, where historically not. And I know a lot of us, especially men, Western culture, it's just hard. But the people that have done well, especially, we see it in Substitute or Owners Club. People have done well, the ones that are really vulnerable. They're very authentic. And then share, guys, I'm not good at this. Who can help me? Or hey, I failed at this. Who can come along me? I want to learn, right? Those are the ones that ultimately succeed because they have opened up and they say, hey, come help me or come join me or I want,
But it's funny that you mentioned that about LA. I lived out there for a few years and I kind of got the same impression that everybody kind of has it's no, I'm perfect type. So that's tough as a man trying to deal with that because you're having to kind of bottle everything up and it's literally my life is completely falling apart right now. It's like I don't know what
Yeah.
to do, but you got to put on that front. So that's awesome to hear that you guys made it out of that. Or well,
Yeah.
I know
Yeah.
marriage. Definitely, you were most definitely always working on it, which is a good
Yeah.
thing. But coming out on
Yeah.
the other end stronger. The
Yeah.
trials are never fun when you're going through them, but you're always grateful for
Yeah.
them after the fact. That's for sure.
Yeah. 100.
So you made it through that storm, very significant
Yeah.
storm, and
Yeah.
then you're kind of rebuilding yourself. And then when
Yeah.
did it come into play from? I know Domo Built, so you're going into Domo
Yeah.
Built, or were you also
Yeah.
doing the fix and flips at that point in time as well?
Yeah, I've been doing fix and flip, but it's more like one off. And, I didn't have the capital that I used to have. And so I'm just doing a little one off here and there. A lot of it also, I started helping friends because I have the experience in how to run fix and flip. So I will help people as a way to, like, I guess, my side hustle, right? To earn additional income so that I can do more of my own deal. So I will help people in how to manage their flips or give them advice and how to do it. But there's about 2 years where I got really involved with the ADU, especially in California. So California, I think it's the forerunner on ADU legislation, right? Just the ease of building ADU. And I love it. Actually, I've been tracking this ADU law since like 2017 or 2018. It really became the regulations have loose, especially after COVID or during COVID. And so that really sparked the massive growth like within California, all the ADU. And so I worked for a company and because I want to learn about this business. It was what a ride there. Won't share too much about, but that company actually, I mean, it became one of the fastest growing ADU companies in the nation. They have franchisees all over the country, but then at some point it got to they reached about over $100 million in revenue. Within 4 years. So it was pretty amazing to watch that, but then also collapse in a massive fashion. So I watched this company going, rise, and then to kind of to top the game, they're on, national news and sharing about EDU to all of a sudden they collapse and there's several hundred clients that are hurt from the process. So that was brutal.
Given your prior experience, what we just talked
Yeah.
about, did that bring up some
Yeah.
PTSD?
Not so much PTSD. I empathize with the owners.
Yeah.
I know what they're going through in that last stretch. When you're running out of money and you're in this situation where people start suing you, my situation was a little bit different because from the outside they potentially could be running like a scam or something, right? But I don't think that was the intent. I think it was just mismanagement of cash flow. But anyway, toward the end, when they're running out of cash and they have all this payroll they have to do, it's like when you're running out of cash and you're running a business, it feels like you're running out of oxygen. It is a horrible experience. And I've gone through that many times where it's like I had to raise money, and then finally you did, and you're like, okay, I feel like I can breathe again. I can rest. Probably one of the few people that really understand what they have to go through, and also what they have to do to even after they close door and file BK and all that. So that led me to this journey on exploring about the power of ADU. Now, ADU itself, it's unique, but I look at more from an investment perspective because historically I would buy properties out of state because, you know the Bird method. You don't buy in California because it's hard to hit that 1% rule. Right? So you buy in Texas, maybe Mississippi, Tennessee, and all those areas. But California has, historically speaking, one of the best appreciation, right? So you buy properties in these cash flowing states, but they don't really appreciate like California. No. But California is just so darn expensive. So it just doesn't work until with the ADU. So it is possible that you can buy a single family home and you fix it up, and then you can build an ADU or possibly two, depends on the zoning. All of a sudden you turn one house into 3 units and you rent them out, right? And now you can actually hit the 1% rule.
And this is with
traditional
financing.
Yeah, no. And then even traditional financing, or you can do it all through a rehab loan and plus a construction loan initially, and then you do a DSCR, right? You're still hitting your cash on cash return, which historically it just doesn't you're like, wait, this doesn't happen. Not in California, right? But now you get to enjoy the cash flow plus the appreciation. I don't look at ADU as like a separate industry. Similar, like I don't look at co-working as a separate industry. I look at it as a tool. It's a tool for investor, and so that's in the area like I love to educate people about. Like here's some, like I have some case studies. Like, hey, this is what it looked like. You can hit your 8 to 12% cash on cash return and then also holding this, and then for the next 7 to 10 years, and then you exit and you have the appreciation.
Yeah, and I think for a lot of investors, it's more along the lines of it's unknown. Like if you're in more, like for myself, I've primarily my whole investing career have been in the residential space. So kind of dipping into the commercial space, it's like that unknown territory where it's like, do I necessarily want to go there? I don't know yet.
Yeah, the same thing. I mean, with the ADU, people's like, I don't know. There's actually a lot of just these companies. I mean, in California, if you do some research, there's another company in San Diego just went bust, right? So there's like a couple hundred clients with unbilled ADUs. So a lot of, my intention to create Domo Build, it originally was ADU business. I have since then kind of rebranded more as an investment company and using ADU as a tool. But yeah, when people are doing research and they're like, hey, I'm thinking about adding ADU, who should I hire? And they do some research on the web. They're like, oh my gosh, this is scary. Like there's a whole bunch of people getting scammed, It's like, so my goal is actually to educate people how to do it themselves. Because there's ways to do it as owner built if you own the land. One of my visions is to actually open Kimono on just sharing it. It's just all free information for everybody. It's like, this is actually how this company does it. Okay, this is where they charge. This is how they charge you. This is where they make their margin. This is how they do it. Because everyone is pitching this idea of, hey, let me show you. This is a full service. It's a white glove service, A to Z. We take care of everything, right? But I would love to show. I was like, well, this is exactly actually behind the curtain. This is what it's involved. And you can actually do a lot of that yourself and save quite a bit of money. Ultimately, people, either they're too busy or they don't want to deal with the headache.
They realize
and
how
they
much
will still
work
come.
it is.
Yeah,
They realize how much
that's right.
work it is.
And then they're like, hey, Lawrence, can you help me with that? Or, hey, can I hire you as a consultant? So maybe I'm more positioning my approach as like, hey, that's the lead magnet. Right, I'm just giving out information for free, but then ultimately people still come to me. It's like, hey, sounds like you're an expert. I can trust you. Will you just help me do it?
Now that kind of brings up, so obviously on your site, you emphasize quite a bit as far as like transparency and integrity, stuff like that. So what would, with that type of wording, I always go to like, what are the like industry sins that you're trying to combat in that?
I watched it just like on the front row seat of this company that collapsed, right? Once again, I think the number one problem is mismanagement on cash flow. And a lot of these companies, they've never built a company this big. So there's a couple of founders that started these ADU companies, and all of a sudden they're at this insane revenue standpoint. So, but to dive in a little bit more, revenue doesn't mean anything, right? That's just on paper, right? What's your expenses? What's actual your net? And in this particular field, revenue is the number that you get when you sign the contract, but you actually don't receive that money until the end. So in the typical ADU business, you really don't make the money until construction begins. So there's about 3 to 4 or 5 months of pre-construction time until you actually make that money. So there's a lot of money you need to float yourself. Now what happened is a lot of these companies, they started growing really quickly and they're getting contracts and they're really excited, like, oh my gosh, so what's the next thing I need to do? I need to build a bigger team. And then what happened is they have this massive payroll and that just sucking up their money. And they also trying to, is like, hey, we're growing, so therefore we also gotta increase our ad spend. But we're not really going to train our sales team how properly close this. So let's say if the sales going well, great. Yeah, you're kind of throwing money away. And eventually you have a bad month or two, and then all of a sudden you're like, crap, I can't do payroll, or I can't pay the subs, or let's just say you close the contract, but then you have not perfected the process in the pre-construction. So this is very much a customer service oriented, right? Business, right? Once someone is sold, they said, yes, I want you to build it. Now you got to guide them through that process. Now, if that experience is really poor, sometimes people are like, I feel like I don't want you guys to build it. This is horrible. The communication is terrible. I'm going to go with another company. So if people bail at that point, all of a sudden this company just lost a bunch of money because they spend manpower on that client, and they're actually not make anything until the back end, right? So that's what happened to a lot of these companies. It's purely just mismanagement. Now, maybe some of them are indeed scammers, and that's unfortunate. But for me, it's like, how do you? I mean, it's all about communication, Josh. I mean, you know it. Yep.
Are those the allegations that are kind of going out there right now, that there's potential scams that were occurring in these situations?
Well, they call them scams just purely because people paid money and they did not receive what they paid for.
Yeah.
So, right from the outside, that's a scam. Now, whether the intent was to scam or not, that's art that you can still debate that. But either way, the end result is the same, right? The client did not receive what they paid for. So it's sad all around. So I think for me is just out of this anger that people are getting scammed, and I'm like, this is not okay. And in fact, I'm like, I don't think this is a difficult business to tackle. And like, I just need to be transparent and do business with integrity.
Yeah.
And I think it can be a successful business.
If you're just above board and actually don't try to hide things, it actually helps out a lot.
Yeah, that's one thing is I can usually tell whether someone isn't a veteran or not by the way they communicate. Because someone who's a company with integrity, they will tell you things, good news or bad news, they'll tell you right away. And that to me, it speaks volumes. So and for me, I love it. Like, I don't care if it's good news or bad news. Like, I don't care if it's bad news. You just tell me right away. Because the faster you tell me, it gives me more option to make a decision on what I can do or a pivot, right? But when you don't tell me anything and you wait till the last minute, all of a sudden I'm pushed against the wall. I have no other options, right? And so, but it's very difficult. This is the part I call like brave communication. Are you able to have brave communication with your clients or with your partners? But most people, they're not trained to have that because of pride or shame. So you have to overcome that. And to be an effective leader, in my opinion, or a business owner, right? 100%. And so for me, the transparency, it's all about communication, where I want to communicate with you. Whether it's good or bad, I want to let you know right away. And I want to inform you all the time so that we're, because the worst thing that you can do for a client is when the client reach out, hey, Lawrence, I haven't heard much from you. What's going on? Like, when they do that with me, that means I have screwed up. I have not done my job well.
Yeah, similar in my property management business with like revenues, because 70% of the portfolio that we manage, it's all short-term rentals. So obviously the occupancy, it has points in the year where it dips, and it seems like an annual thing where you're looking to kind of explain to the owners like what's happening in that situation, what we're doing to try and remedy it or fill up occupancy with maybe a different method. But if you don't have that communication, you just lose them. Like, they'll jump ship right away. And I think a lot of people shoot themselves in the foot because they don't communicate enough. I think if you lean on the side of over communication, you're usually much better off. Now,
there's also ways that you can communicate more efficiently, right? So it can be very labor intensive if you're constantly doing all the communication yourself. So some ideas like, hey, how do you utilize technology to help you communicate, or utilize AI, right? And so it's just sharing information, right? It could be a text. It could be like literally a text that's scheduled on every Friday at 2 p.m. and there's some kind of update. And it could be bullet point format, right? It doesn't need to be this long paragraph, right? But when you do that consistently, your client will be so happy. They know what to expect. Hey, you know what? At 2 p.m. on Friday, I'm going to get an update, and I know what's going on, right? And so for, let's say I have an investment property, someone, you're managing it for me, but I don't need to reach out to you all the time because I know there's going to be an update coming. So that's really efficient because I am not taking your time away from doing bigger things. So when I was at the ADU company, was the clients will not get the proper communication from the managers or the pre-construction manager, and so they'll reach out to me, but I was in sales. So I actually have no idea. So one phone call would trigger 3 people, and there was a lot of time is wasted, right? And so I was like, that's not the best way to do business.
No, not at all.
Yeah.
So with that,
Yeah.
so with the ADU, well, with Doma Built, you said you're shifting
Yep.
it more into more of an investment business overall. What's your goal from like a revenue, top line revenue standpoint and kind of time frame?
Yeah. Yeah. So I've repositioned the company more as a fix and flip, like a real estate investment company where, people can partner with me to do flips, but we can look at each project from, we either do it from a fix and flip standpoint, maybe it can be a buy and hold, or let's do a buy and hold plus an ADU on this. So let's just use ADU as a potential opportunity to also co-living.
Yeah,
for example,
to
right?
increase the exit, the value on the exit. Yeah.
Yeah, and co-living, like I haven't dabbled in it. I know it's kind of all the craze right now, but what I did for 7 years in the commercial real estate world, it's very similar. And so I'm really excited to get into it. I think I have a certain perspective that just from the co-working world, I've seen how the industry kind of flowed during that time. I think it's gonna follow similar suit.
Yeah.
In the co-living. Well, I think at some point there's a saturation point,
100%.
right? And then there's going to be consolidation. But then how do you break out of the pack, right? Because everyone's doing it. So just like when co-working was really trendy, I don't think it's a fad, but during that time it was trendy. Everyone's trying to do it. It's like, how do you stand out?
Yeah.
What makes you unique, right? And so it's the same thing, kind of like, hey, what makes this co-living home unique? It's not just like a bunch of IKEA chairs, whatever, and you put it on Pat Split. Like that won't do it anymore. So at some point, there's going to be a transition where, and it's going to run it like, is this like a super operator, right? That runs it more like a hotel.
Yeah.
It's just going to move into that. And so there's still opportunity, but I think people just need to start thinking about that. Like, how do I step up my game?
Yeah.
Do it now rather than later.
Yeah, it's kind of like the Airbnb market where, there was a pretty significant oversaturation in that. And I think because of that, that's why a lot of people are kind of leaving in droves. It's because they don't really know how to necessarily set themselves apart from the pack. But it's kind of interesting. So I saw you kind of piqued interest when you can tell that you really enjoy the design aspect of it from your background and that side of things.
Yeah.
So is that kind of, would you say that's one of the reasons you want to stick in more of the fix and flip realm? Do you see that as like one of your main value adds that you've been able to kind of implement from like your co-working spaces?
Co-working.
Yeah.
Yeah. Well, I think a lot of us are visually driven. So the design aspect, I went to design school too. So that's why I love it. But I'm all about curating the right environment for my clients or members. And so it comes down to experience, right? Just as you're managing these Airbnb, it's the experience that's why they're paying the money for. So for me, when I look at a project, like what is the experience I'm trying to cultivate here? Right, whether it's a fix and flip, like I'm thinking about the end buyer, who's going to be my end buyer, right? And that's how I'm going to design it. I'm not doing it just because, hey, let's put some, Swiss coffee, paint on that, white, shaker cabinets, this, like I want to go another level up. And so same thing, even with the co-living. How do I design it so that they don't feel like they're in these little prisons? No offense. They're cramping their room, right? Their room is what they pay for. But what about the open area, the common area? How do you make that very inviting? How do you use that? Or what are some ways to, promote like a sense of community? Or maybe not. So, I think Jamil mentioned like, hey, he provides some like, financial courses or something like that. Like, I love that. Like, and what are some other experiences that you can implement? Same
like
thing with
helping
Airbnb,
even
right?
credit repair, stuff like that.
100% credit repaired could be courses. Like I even thought about like, hey, what about Taco Tuesday? I'll cater it as a management company,
Yeah, like
right?
actually build up
You
the
know,
community there. I like that.
right, you know, or yeah, there are just so many little things that you can do to enhance the experience. So it comes down, and so the aesthetic is part of the experience. If both units are the same price, but one looks more professional or it's clean, or 10 out of 10, you're gonna pick
Easy
the one that
decision.
looks better.
So it sounds like still majority. So it's going to be the investment route, or like you're more of an investment firm at that point in time. So what's your main goal as far as top line revenue here in the next 5, 10 years?
The short term goal is to do as many flips as I can, and also just get into deals where I'm able to earn enough passive or active and also passive income so I can get back into the commercial real estate world.
Yeah.
I think that's where I like to dwell in. That's the domain I get really excited about.
I think
But also,
I
yeah,
think you
mostly,
and
yeah.
Lauren Levy would get along real well.
And so, but I'm not there yet financially, and also it required me to be really vulnerable within the community and say, hey, this is what I can offer. But how do I, like I need help or I'm not connected. I think the goal is just to, yeah, like, hey, this is what I can do. If love to chat, let's do it. But yeah, that's where I want to be in the commercial real estate world, in the multifamily or like a mixed use is probably something I get really excited about. So you have living plus retail plus office, like that is the area where I get
The ideal.
super,
So
yeah.
kind of like
Yeah, because there's a lot of synergy there.
what about more along the lines of say like a boutique hotel type situation? Because I know like
Yeah.
Lauren, he's
Yep.
done with some mixed use.
Yeah.
But yeah, he's
Yeah.
the boutique. Well, kind of a boutique hotel. Yeah,
But
essentially.
yeah, like a boutique hotel, that will be. I have not dabbled in that, but that's an asset that I'm really interested in. I think to be able to partner with someone. So the part that I am not strong in that area will be the operation, right? So to run a hotel, there's it's probably there's the right SOP. I don't have the right SOP to run that, right? From what's the CRM that you need, what's the process, how do you market it, right? You need to have an extensive sales team for that. But from how you structure the hotel, from an experience standpoint, like that part is really, really exciting. And that's the part. It's like, hey, if there's a whole area being developed, like a hotel, like for example, adding a share space in a hotel is a phenomenal idea. Or imagine a boutique hotel next to an office building.
Oh, perfect.
And then, doing something like that. Now we can work together because you can do events, you can do conferences, and then you can have people that, let's say, hey, you join my co-working spaces. You join my co-working space and you get to use the amenity at the hotel. Now I can spend less money on building out amenities and I can focus on the highest margin product, which is private offices. So there's just so many things when it's done, there's that synergy. So that's the part that gets me really excited.
Yeah, that's awesome. Yeah,
Yeah.
it kind of gets my gears spinning because, like right now, I have a co-working space right now for my operations
Okay.
because it's not something I necessarily. I mean, it's just me and one other W-2 employee, and then the rest are 1099. So it's not like I
Yeah.
necessarily need a full-time office for property management. I don't think you necessarily need
Yeah.
that, but.
Right.
It's funny. As far as their amenities, you pretty much once you gain access to that, it's with Regis. And then
Yep.
their campus, I mean, it has access to like restaurants, it has access to hotels. I mean, it's the revenue potential there is pretty substantial. So I could
Yeah.
see that. What's the best way for someone to get a hold of you and like say they want to invest in one of your fix and flips? Like what is the primary thing that you're needing right now? And then two, what's
Yeah.
the best way for people to get a hold of you?
So there's two things. One, I am raising more money to do fix and flips. I think anybody wants to, when there's an opportunity, so you want to raise more money. But my intent is more. I think I was really inspired. I think it was at Squat Up. Pace mentioned something like, "Hey, I would just do something where someone pay me 30 grand. I fly out there to help them get their first deal."
Yeah.
Like literally for them to watch. So I kind of took that and I was like, gosh, what's the value that I can bring? Like I'm not so interested in just giving someone a fish, but rather teaching them how to fish. And so if someone really want to get into the fix and flip and they want to co-invest with me, like I love that. Now it's more work for me, but I enjoy, it's beyond just making money. I think it's the fulfillment. Like, man, I just taught someone how to do this, right?
Yeah.
And then we can also make money together.
Yeah, purpose over.
It's purposeful. Yeah, that's right. So that's number one. People who want to get into fix and flip, and they're in the Sacramento area, like, happy. Let's partner up. Let's do it.
Well, you want to do it primarily there locally, then.
I mean, I can fly out. At least for now, I think that's where I'm most effective, right? Because also I run a team. Now I can also fly out to anywhere in the world, or I mean, not in the world. Sorry, in the United States, and help people, right? Let's say, like, I've never done a fix and flip. What do I do? Start to finish. Like, I can go out there and it's like, let me spend 2 days with you, and these are all the things you need. And this is how I will look at it, and this is how I analyze the deal, and this is how I negotiate this deal. So I can do that too, but I am most effective when I'm in Northern California, Sacramento to like San Francisco, because I also have my team here.
Yeah.
Right. So that's a big part of the equation to be an effective fix and flipper is you have the right team to do it. Right. A lot of time people's like, oh, I just want to. Yeah, I like this. I like design, or I watch HGTV, so I want to do some fix and flip.
Good luck.
But I was like, yeah, exactly. But I'm like, you don't have the process down, and that you're gonna end up losing money. So that's number one. Number two, it's also like, hey, more deals, right? So I have partners that we're looking for more deals to do, right? So connecting with wholesalers locally, or anybody in the country that have deals in Sacramento all the way to San Francisco, like, I'm open to look at them.
And is there like a specific like buy box that you would say they're looking for in particular? Like on average? I mean, I'm sure each of them are a little slight difference, but
So let's just focus on Sacramento. Like, my buy box in Sacramento for acquisition is somewhere between 350 to 400,000. That's the acquisition, and then the ARV for that is usually in the 550 to 600.
Yeah, makes sense.
So that's kind of where I'm at, and then I also have a buy box that I can text anybody who reach out to me, and I was like, this is exactly what I'm looking for, to the area what I'm looking for. So there are certain areas that are just too far for me that my team doesn't want to go, and myself, right? That market is just in a rural area, like, where I don't feel as comfortable to dispose that property when it's done.
Yeah,
right?
You don't
So
know if it's
for
going
me,
to disposition as quick as you need it to.
That's right. Yeah, that's what I need as well. Just like more deals, because I have also the capital to get into more deals right now.
Awesome.
So those are the two things. And then for people to reach me, Lawrence, LAWRENCE at DomoBuilt, DOMOBUILT.com.
Perfect.
And they can reach me there. Yeah.
We'll make sure to put that.
Or they can reach out to you, Josh.
Yeah, there you go.
and you just
no, we'll make sure to reach out to you. I think with an investor with that type of track record, where you've been able to go through that type of turmoil, you've learned a few things, especially going through the dip following 2008, 2009, coming up out of that, then coming through another dip in 2020 through the pandemic with a very large scale portfolio, and then coming out of that. I think that's a huge testament, and you learn a ton going from those type of trials. So I think Lawrence is definitely a one to reach out to, guys. I think you could glean. We can't manage the amount of insights that we'll get from him in just 1 hour. So I would definitely take him up on that offer. And if you are looking to get into the fix and flip game, I think he's your guy, especially when it comes to Sacramento, California. So, but yeah, with that, Lawrence, I really appreciate you taking the time. It's definitely an honor having you on the podcast. It's nice to get some insights from somebody that's kind of been through the thick of it. So I appreciate you. If you enjoyed this episode, it would mean the world to me if you hit the like and subscribe button. Also, if there are any particular insights that you're looking for, stuff that you're looking to learn, please comment or reach out. I want to make sure that this show is like super helpful to y'all and it just continues to get better. So just bring to me what you're needing in your life and business, and we'll try to make it happen. So with that, thank you for watching, and I will catch you on the next one.